Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Thursday, July 6th. We had a little more movement than I expected to see here in the NASDAQ market. I like this behavior. It's a great way to begin the week after the holiday. I do look for follow through. Again, Thursday and Friday is where I thought we would see some volatility. I am still bullish on this market, and I do look for continuation to the upside. In the currencies, I've had a few questions regarding how the size of the moves here are calculated. So I just want to give you a quick overview of that. First, before we get into that, the euro. This market is getting low enough to find buyers. We may get a bounce back to the upside, so I think we have to be cautious on the short side for that market. But each 0.0001 movement in this currency represents $12.50. That is the value of one tick. The difference here between that bearish and bullish level in that market was 165 ticks, or $2,062.50. That's how that's calculated. Over here in the Swissy, the difference between that bearish and bullish level, it's also $12.50 a tick, 120 ticks, that's $1,500 per contract. And in our friend Mr. Yen, the difference between that bearish level and this bullish level is 30 ticks, and that's 30 times $12.50, or $375. So all those currencies are $12.50 per tick. Now, in the Aussie dollar, in this market, it's $10 a tick. And the magnitude change here between the bullish and bearish in that market was 95 ticks. So 95 times 10, or $950. British pound, the magnitude change here in this market was 180 ticks. Each tick in that market is $6.25. So the magnitude of change here is $1,125 a tick. The Canadian dollar also, by the way, trades in $10 ticks, just like the Aussie dollar. So that's where those come from. Your broker's platform will automatically calculate that for you. But I had some questions and I wanted you to understand that. If you take a look at interest rates, we're looking at a sideways move here. I'm looking for more of the same to lower when it comes to the 10-year notes for Thursday's action. Gold also is a market that traded above its bullish level here, and it trades in 10-cent increments. Each 10 cents is $10. So the magnitude of change here between the bullish and bearish levels is $20, or $2,000 a contract. I'm looking for a sideways to slightly higher move in that market for Thursday. I'm not bullish though on gold. And let's take a look at copper so you understand that one. The magnitude change here in that market, in terms of ticks, it trades in 0.0005. So it's a half of a thousandth of a cent for the increment of change, and that's $12.50. 1 cent move here is $250. Now this move, the size of that move was 9 cents. So 9 times 250 is $2,250 a contract. And I look for continued movement to the downside, but Thursday inside type day for that market. Crude oil also traded below its bearish level. The magnitude change here in that market is $3. Now it trades in 1 cent increments. Each 1 cent change is $10. So each full dollar is $1,000, and this moved $3. So that would be a $3,000 per contract move for crude oil. And I do look for continued movement to the downside. Soybeans, this is also a market that's getting high enough that I think it may be slowing down, but we do have a weather market in play here. So nothing telling us to be a seller at its current level. Well, that concludes today's market studies. Thank you for being with me. Look forward to being with you again tomorrow. In the meantime, take care.